Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Sylvia Jablonski, CEO and CIO at Defiance ETFs. We're talking about the broader market, the AI trade, quantum computing, drones. So a lot to talk about. Sylvia, welcome back. Great to have you with us today.
Thank you so much for having me. Happy to be here again.
So 5 of the Mag 7 stocks, they reported their quarterly results recently. NVIDIA, the king of the AI trade, they are reporting next week. And NVIDIA's stock has been on fire over the past couple of weeks after doing nothing basically for 6 months or so. But the biggest takeaway from the big tech earnings, in my view, was that the AI trade is not slowing down. The 4 hyperscalers are now set to spend about $725 billion in capex this year. Of course, investors want to know whether these outlays will bring returns anytime soon. But I was interested in your thoughts on big tech earnings and the future of the AI trade.
Sure. So it's quite the exciting time. I think, the last time we spoke, or maybe a couple times ago that we spoke about, we talked a lot about the interest in AI and how much, flow had been flowing into just some of these well-known AI names like NVIDIA, for example. I think for years, the AI trade was like the ChatGPT moment and Microsoft and OpenAI and NVIDIA. And I think what we're seeing now is really that the AI trade has very much caught fire and it's now spreading into all of the different, kind of like micro sectors of AI. So you see this big growth and push and interest in things like quantum and supercomputing and AI infrastructure and the picks and shovels and in photonics and, memory and all of these things. And so when, bringing it back to, earnings, I think big tech earnings confirmed one thing, right? That AI trade is definitely no longer hype. It's becoming one of the biggest, largest, most notable infrastructure builds out ever since the internet, basically. So you have like Microsoft, Amazon, Alphabet, Meta. To your point, they're spending, 700 to 700 plus million in infrastructure in 2026 alone. That's just this year, right? And we expect it to pick up. And so I think that the key takeaway for investors, like so far, it's that it's supply constrained and not demand constrained, which is, good and bad in some ways, right? But they're basically saying, we just can't build fast enough. We can't supply fast enough. And so that is a pretty bullish sentiment for semiconductors, networking, power, infrastructure, cooling, all that stuff. And I think that, as for the future of AI, I think that you're going to have phase one was like, again, like by NVIDIA, AMD, Micron, Broadcom, and I think that continues for sure. But then I think you're going to start seeing, and we're seeing it in ETFs for sure, that, it's going to start going into power, energy, utilities, cooling, optical networks, connectivity, satellites. I mean, I could talk about this all day long.
Right. So now major indexes have rebounded very impressively. They are all at all-time highs. So in general, stocks have defied all geopolitical uncertainties, rising oil prices. So the rally has been driven by blockbuster earnings. Earnings have been phenomenal, we have seen. And then, of course, intense AI optimism and also hopes for an Iran peace deal. Do you think the rally can continue? And I also would like to emphasize that some areas of the market do look a little frothy as of now. So are you concerned about the valuations at all? And are there any particular areas of the market that you like?
Yes. So I think, it's been really interesting to see what's happened with the market. I would have expected a longer period of this kind of headline response, right? Because of Iran and because of geopolitics. Like it's my understanding yet that we don't really have a deal or a clear sense of closure here, right? And so I think that there is this overhang of what could happen if that doesn't go the way we think, or if it lasts much longer, because then you start thinking about, like, I mean, we're talking about stocks and investments, right? So I don't want to kind of underpin the casualties and things like this, but if you're thinking about it from a market perspective, what happens to inflation and the customer, consumer balance sheet and stuff like that. So that's the unknown. However, if the war in Iran comes to an end and you have these great earnings results, the earnings are kind of justifying the valuations, right? So I think that the rally can very much continue if that's the case. I think, if you look at, to your point, some of the areas perhaps could see some frothiness, like when you see stocks doubling and tripling on, on being the next NVIDIA or whatever, just like on headlines alone and whatnot. Like you can see that things have moved up a lot, and maybe you want to kind of think about where to diversify, but that's just part of it. I think then you'll start to see investors become, broaden out, become more selective, and I think you'll see basically enterprise AI adoption, compute, networking, memory, some of the things I mentioned before. And I think that those areas have a lot of room to because there isn't that level of supply there that we need. And so I'm very interested in watching those areas that we discussed before, kind of like the AI infrastructure trade, the picks and shovels, the, kind of the memory and photonics side of it. Quantum computing for sure. As you know, I always talk about that, but so I do think it'll kind of like go into those areas.
Right. So talking a little bit more about the AI trade and the broadening of the AI trade that you mentioned earlier, a lot of interest in data centers, power infrastructure, cooling, heating, and all that, and memory chips. So we know that this AI boom that has resulted in a surge in demand for data center capacity and to store those vast amounts of data that these data centers generate. And these data centers, they are substantial energy consumers, and particularly AI applications, they require even more power, a lot more power, in fact, than traditional computing. And your ETF, it is the Defiance AI and Power Infrastructure ETF, AIPO. I noticed that this is up almost 50% year to date, and this is a new ETF, not this just about 10 months, a little less than 10 months old, and it already has a little over 650 million in assets, so doing quite well. Tell us a little bit about this ETF and how it benefits from these themes.
Yeah, I think, you kind of started going into it a little bit, but, basically the International Energy Agency projects that global data center electricity could exceed 1,000 terawatt hours in 2026, which is basically enough electricity to run Japan for a year, to put it in layman's terms. And AI-focused data center electricity surged 50% last year. It's dramatically outpacing overall electricity demand. And, infrastructure is so intense that you have 70 different US jurisdictions now that have pretty much paused new data center developments due to the power and water concerns, right? And so we think that, and we've read and learned that data centers could end up taking up, 10 to 20% of electricity in the next 5 years or so. And and so AIPO is really meant to be that second derivative of AI. AI is sort of going to happen, and it's going to grow and filter out. And, in order for that to happen, you need these different companies to participate and to provide things like energy and infrastructure. And so, AIPO does a really great job of that. So it basically is giving exposure to AI and then the critical power infrastructure energy resources, decentralized energy solutions, electrical grids. And yeah, I mean, it's absolutely, to your point, it's actually absolutely taken off in terms of demand. And I think it's because the retail investor, going back to our conversation about froth before, they're thinking about like, where can I go next, right? Where can I go next where there's almost this guaranteed utility play? And, not to say that the performance of the ETF is guaranteed, but I think the need for utilities for AI to grow is certainly guaranteed.
Awesome. Now, you also mentioned quantum computing and supercomputing earlier, and we know that quantum stocks have seen a lot of interest from investors because basically they're trying to speculate on the next big thing in technology after AI. So, in your view, is quantum computing the next big thing after AI? Talk a little bit about the market opportunity, also how big is this market, etc.
Yeah. And so with quantum computing, it's been super interesting because for years, it's felt like a little bit of a science experiment, I feel like, to a lot of retail investors. Like they kind of just don't necessarily know what it is and think it's, something highly speculative and whatnot. And then now all of a sudden enter, the top quantum companies like IonQ, right? They had strong revenue growth. They've done acquisitions, cloud partnerships. They crushed earnings. They were up, it was like 750% or so, 65 million in revenue. They raised guidance, right? And basically they are generating actual revenue and they're scaling. And then quantum computing, that's another company that is really starting to see like solid cash flow and build out of the infrastructure of quantum and AI. And you have like D-Wave, which is annealing, and they have this 1,500% year-over-year growth in their pipeline, and 179% year-over-year revenue growth. And so I think what's happening is that it's becoming a major investment theme because it has this potential to solve all sorts of problems that are impossible for a classical computer to solve. And then, it's also just become more commercial. It's something that is being used for drug discovery. It's something that's being used for cybersecurity, photonics, cryogenics, aerospace and defense. Banks use it to better determine their risk and price discovery when they make markets and things like this. And so I think the more that it becomes commercial, the more we see the real world use, the more that investors will perhaps start believing that it's going to define compute platforms in the future and, could invest in it.
So your quantum computing ETF, it is the Defiance Quantum ETF, ticker symbol QTUM. And in full disclosure, I actually own it in the ETF investor portfolio that I manage. This provides exposure to global quantum computing and machine learning industries. So I'm looking at the top holdings. In fact, two of the hottest stocks in the market, Micron and Intel, they are the top holdings currently in this ETF. And then you have some pure play quantum computing companies as well. You mentioned some of the names, and I read an article in the Wall Street Journal recently that 3 quantum computing companies have gone public this year already, and many more are planning to go public later this year. And in fact, before this year, there were just 4 pure play quantum computing companies, D-Wave, Rigetti, IonQ, and Quantum Computing that you mentioned, the last 2 you mentioned. So tell us a little bit about the methodology of this ETF, and is the composition going to change a lot as more pure play quantum computing companies go public?
So quantum computing and machine learning are basically reshaping the future, and this ETF is meant to give investors access to both of those themes. So it's everything from liquid companies in the global quantum computing and machine learning space, quantum tech, superconducting applications built on quantum, AI chips that relate to quantum software, specializing in like perception, visualization, big data. And, so what we do with this ETF is we really try to create this product that gives you access to like all of the companies, large and small, that are involved in quantum computing. So the pure plays all the way up to, the big guys that everybody's a little more familiar with. And so what happens with that is you get access to the small, high beta, hyper growth quantum companies that are, recent IPOs or like pretty new and, could be meaningful, kind of like mavericks in the quantum space. But then, because they are new and whatnot, you have the ballast of the larger companies like the IBMs and the Oracles that are, involved in quantum computing, but they still have balance sheet, they're quality companies and whatnot. So we think it's kind of the perfect mix of getting exposure to everything related to that quantum universe. And then as new, and we have different ETFs. So I guess as new products come to, as new ideas come to market, like investors could look at a leveraged pure quantum play. They could look at, this ETF, and they could look at the single name leveraged ETFs. Those are more for traders than they are for holders. But yeah, I mean, we're quite happy with the quantum ETF, and it's been in the market since 2018, which is like far before anyone knew about quantum, and we've really seen it just take off over the last years.
Yeah, I saw that it is now approaching almost 5 billion in assets, over 4.8.
Might happen today.
Oh, awesome. Awesome.
Yeah.
And it has the performance is also very impressive. It's up about 76% over the past 12 months. So really a great ETF. And finally, I wanted to talk about JEDI, one of your newer ETFs. Excellent ticker symbol. So this invests in drones. And of course, these recent conflicts in the Middle East and Ukraine, they have highlighted drones as critical warfare tools. So tell us more about this ETF and the broader investment opportunity in drones.
Yeah. So again, just sticking to the theme of AI and where can it go, right? And so we talked about the broad-based kind of general AI trade, which is the semiconductors, and then we moved into AI infrastructure and the picks and shovels. And so this was just another niche of AI. And so we think that drones and AI-enabled warfare are becoming one of the biggest shifts in defense tech, and this is the idea that instead of having like one, $200 million missile, you could have 200,000 unmanned drones, right? And I think that it just fundamentally changes the economics, the speed, and the scalability of defense. And I think modern conflicts now are showing that basically these inexpensive autonomous systems can basically really support traditional military initiatives. And so because warfare is becoming autonomous, because defense spending is going to this sector, and militaries globally are basically really racing to modernize after seeing what happened in Ukraine and Red Sea and Middle East and things like this. I mean, it's just really, there's a lot of flow coming here. So basically the global military drone market is projected to be about 100 billion over the next 10 years. The Pentagon and NATO are accelerating spending on AI enabled surveillance. And so, long story short, what this ETF does is it combines all of these names into one ETF wrapper. So you're getting exposure to everything from like the satellite and the communications, the space aspect of it, as well as the drones and the more modern military plays here.
Very interesting. We'll have to leave it there, Sylvia, but thank you so much for joining us today. Always great to catch up with you.
You too. Thank you so much.
That was Sylvia Jablonski of Defiance ETFs. Let's quickly recap the ETFs that we discussed and their tickers. So the Defiance AI and Power Infrastructure ETF is AIPO. And this holds companies that derive at least 50% of their revenue from AI-related activities. And so the top holdings in this ETF are Quanta Services, PWR, Vertiv Holdings, VRT, and GE Vernova, GEV. Then we talked about Quantum ETF, that defines Quantum ETF, ticker symbol QTUM. And this provides exposure to the global quantum computing and machine learning industries. So current top holdings, as I mentioned earlier, are Micron MU and Intel INTC. But this also holds pure play quantum computing companies like INQ and Quantum Computing. And then finally, we talked about the JEDI ETF, JEDI. It is the Defiance Drone and Modern Warfare ETF. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.